How's it going? It's Ralph here from Beyond the Hodl, and in today's Bitcoin Weekly Breakdown, we will be taking a look at the hash rate, the COT positioning to see how the smart money is positioned, and to wrap it up, we'll go ahead and take a look at some important levels that would have to get broken to the upside in order to make us bullish, because of course we're still bearish. So let's get started. So to get started, guys, we'll focus on the stage 1 of your analysis, which is the anticipatory stage, and that's when you want to focus on broad sentiment, bias, macro views. And for that, we want to use, like I said before, the hash rate, the COT analysis, and we will be taking a look at some on-chain as well. So here, looking at the hash rate, if it dropped, it absolutely got demolished exactly as we predicted. As you can see here, this is called bitinfocharts.com. And it's actually down another, well, it's down 18, almost 19% in the past 24 hours. That's this move right here. So if you're in a camp like me that believes that hash rate precedes price, then you'll either be expecting another drop in price, or at the very least some consolidation in price. So obviously we have seen a rally in price here the past 2 days, but I wouldn't really be expecting some really strong, believable move, in my opinion, and we'll get into more of those reasons later in the video. But it's definitely not looking good. It's exactly as we thought, because 90% of mining got banned in China, and we were right on that front too. They had most of the hash rate power. Well, now when you lose 60% of the network's hash rate, it does make it less secure, guys. So now you're more apt to a 51% attack. That's a double spend. That's very a hack. That's very dangerous, especially when you have so much money in this blockchain. Now, I'm not going to get into the details on, oh, well, it would still cost a lot of money or whatever. I'm using this hash rate more as a broad macro view to tell me what the sentiment is. I understand as well that this is a short-term thing, a temporary thing, but the thing is, we are assuming that these miners are going to set up rigs and set up companies in other countries. They technically don't have to, right? So that's actually a very dangerous assumption, that people think, oh, it might be down now, but price is going to keep rallying because the hash rate will recover. Well, you don't know that, right? Those miners could have changed to do something else, a different industry. They could have, like I said, back in April, when we lost 40%, when we lost this right here, my idea was that those miners were going to go mine for gold. Again, that was a rumor back then. I will never know if that's true or not unless they publicly come out and say so. But, you know, nonetheless, look at what happened with the market. So that's how we're looking in the hash rate. Let's go take a look at another metric. So guys, continuing with our stage 1 part of our analysis, we have here something called the NUPL. And the specific one that I'm looking at breaks the NUPL into 2 different ones. There's the short-term NUPL and the long-term NUPL. There's obviously the regular NUPL. And you guys can find this at glassnode.com, but the one that I'm using here for the long-term, I only really care about long-term holders. Obviously, since those are the people that will tell you the long-term bias of the market, you really want to know those strong hands when they capitulate and when they are at a high. So for those of you that have never seen this, it's really simple. The way it works is when you're in euphoria and greed, you really want to be a bit more careful with the market. And funnily enough, look what happened here. We were in the euphoria and greed part. And this lines up perfectly with when our COT positions were telling us that they were selling into this move, right? Remember from the previous video, they were not adding longs as this high right here was being made. And look at that, right? So they were smart enough to start taking profits during this rally. And I'll show you guys when we take a look at the COT in a little bit. But so you have the blue, and that's your euphoria phase, and of course then you have the red, that's your capitulation phase. So obviously, if I want to be a buyer, a long-term buyer, we don't advocate hodling, but if you do want to hodl, and if you want to hold for a long time, that would be the beginning of a cycle. You basically want to do it when long-term holders capitulate. So that's how we do our cycles here at Beyond the Hodl. We have the beginning of our cycles at long-term holder capitulation, and then we really want to see the cycles end when you have long-term holder euphoria. Now, we're a really interesting part here because we have that euphoria part we just mentioned, and we came from the long-term holder capitulation, which happened back in March, the COVID drop. And essentially, there's two different things that could happen right now, right? It could be kind of like the 2018 high, where you went from capitulation to the euphoria phase, and then you went straight back down to capitulation, right? That's a full cycle. Or you could have this one right here that happened back in 2013, where you went from capitulation to the euphoria, and then you got a fake out. So you see this fake out move right here ended up coming back to the orange, which right here is optimism and anxiety. I'm sorry, disbelief. Is belief and denial, right? So you go from euphoria to belief and denial, and then it almost uses it as some sort of support, and then it comes back to form a double top, right? So if you're in the camp like I am, that the cycles do get longer, and that we're not done with this bull cycle, because I don't think the bull market is over yet. So I am expecting this. I mean, back when we were at between 50 to 55K, even at 60K, this is exactly what I wanted to see. I was uncomfortable that we were seeing the COT positioning the way that it was, the smart money positions, and that we were already in the euphoria. So I was telling, okay, we need to cool off. This is too greedy of a market. So now what I want to see is, now that we've reached this level right here, let's go back to the other picture I have, so you can see it right here, right? We've spent a couple days at the belief and denial phase, which this is great. So step one is done, right? I wanted to see enough down move in price in order to get us to the green. And now is when I wanted to start seeing some bullish signals. Now, as you just saw from the hash rate, we have not seen a bullish signal. So that's important. And remember, we want to see the hash rate recover and stabilize. But we have this prerequisite, right? So our sentiment is getting from super bearish to now being less bearish. So if I had to put it in a percentage base, I was basically about 95% bearish here, and now we're getting to that 60-40 split where I'm still bearish due to other things that haven't changed to be bullish, to okay, at any moment we can go 50-50, and then I can flip from being bearish to being bullish, right? Actually, another thing that I don't want to forget to mention or to show you is look at just how explosive and aggressive it was for the second pump, I guess, if you want to call it that way, right? You had the first move right here, that was a fake high, and then you have the second move here, and that's when price is really useful. So I always keep talking about this stage one, anticipatory stage, and then the execution stage. Well, if you use your SMPDTs, you should have been able to see that this right here likely wasn't supposed to be a high. So when you see this here, you didn't have any previous models that say it could use the denial phase as support and then come back for a second time. You never had that, but you definitely could have seen based on price why that wasn't a low that you should have really trusted. And then when you pile that into maybe the idea that it was going to go up again, well, there you go. You had that extremely parabolic rally, and that's kind of what we're seeing right now. So let's go to our COT analysis to see kind of what that's telling us, right? If we should be staying bearish. Okay, guys, so taking a look at Twitter here, I had posted some data on the COT and kind of what the numbers came out as. So if you want to check in with our Twitter every single weekend, I will post a picture, and then I'll make an analysis on the actual data by Mondays. I think that's the way that works the best. So taking a look at this here, we can see that the asset managers, which is the group that we follow, had closed 98 contracts in longs, and they had added 110 contracts in short. So just by looking at this, you can already see that they're not really thinking that the trend is the bear trend, right? Well, let me not call it bear trend. Sorry, the retracement is done yet. Because remember, I am still in the camp that says this is only a mid-cycle retracement. So based on the smart money and how they're positioned, we can see they're not looking to end the trend at the moment. Now, one thing that is very important for you guys to understand is that when you trade the CME or pretty much any other market except crypto, it does not trade 7 days a week. So because it only trades 5 days a week, there is no data for Saturday or Sunday. And even more important to understand is that you're getting this data every Friday, right? So every Friday you get this data, and then you're looking at the data from Tuesday to Tuesday. So I marked out right here, and I think I'm going to start doing this every single week just to kind of keep it in perspective for you guys, because when I say the smart money is bearish, in this specific moment in time, I can, it's not taking into account anything happening here, right? And of course, you also have to take off anything that happens during the weekends. So when you remember that, it kind of puts a different spin in your mind, because now what you should be thinking is, okay, if I know that the smart money was adding shorts between June 15th to June 22nd, then that means that any important resistance level inside of that week, I better see it hold. And you see how that's a completely different mindset than, oh, let me just see, what price level we're in, what trend line just got broken, and stuff like that, right? So you can think of it the same way. The way we picked the high was back in January right here. The smart money was decreasing. If you look at this purple line and the white line, when it went below the average, we were thinking, okay, so that tells us that the longs went below average, the shorts went above average. So if price is going to continue moving higher, that's very dangerous, because it's going to stop eventually, right? And that's kind of what I'm trying to say here, where any one of these, any resistance levels as price was being created here was because they were adding shorts. The minute you broke any important level within that range, right? So from the from early or late January, and then it finally turned net bearish end of February, all the way until April, right? And then you finally got this move, right? So when this broke some important structure, you had some indicator, whatever you guys want to use, because the entire move was created on bearish on bearish price action, right? On bearish orders, that was very dangerous. Same thing here. If you want the bear trend to continue, well, you better respect any bearish signal, any bearish resistance, any bearish indicator, whatever you have. And the minute anything bearish gets broken from that range, then you can start to think, oh, that's interesting. Because remember, price should move, or well, not should, price could move first because the data is delayed, right? If we know the data is delayed because we only get it on Fridays and it's from that Tuesday to that Tuesday, then right now we could have a move higher. It breaks that important range, and then on Friday we find out that they actually decrease shorts and increase longs, okay? So that's kind of why it's a little tiny bit challenging, because the data is delayed. But again, at the end of the day, we're using price action to confirm the COT and vice versa. And then we're also using other things such as on-chain and hash rate to all kind of confirm each other. And that's exactly what I keep saying. You cannot use the execution part of your strategy all the time, right? If you see people always talking about the funding rate or always talking about liquidations, order floor, whatever, those are all execution type of entry signals. Now, of course, some funding rate you could argue is overall sentiment. That is true. But again, it depends how you use it, right? And if the way you're using it is for execution stuff, you're going to get the same type of data all confirming each other, right? It's kind of like an indicator that measures the trend, and you're looking at 4 other different indicators, but they all measure the trend. Like, what's the point, right? No, you want to use one that's a momentum. We don't use indicators, but if you use indicators, you want one that's a momentum indicator. You want one that's a trend indicator. You want one that maybe it's a reversal indicator, right? You see? And that's the type of stuff that you guys want to start imagining and thinking when you're doing this, which is how we do things here at Beyond the Huddle. So that's kind of what I'm seeing right now, is that I am bearish because we added, and you can see right here, the percentage, right? So the percentage short, that's what this yellow line is, we went more bearish, right? So anytime we cross the 60, it could potentially turn around. But the thing is, it's not going to turn around unless this net position goes back above the average, this white line, and then you start to go closer to the zero line. Now, we thought that was going to happen potentially, right? Again, we're waiting for this week's data to see if that was going to happen for this week, but as you can see, nope. They rejected it. The longs went back below average, and the shorts went back above average, as you can see right here. So this is huge, guys. Absolutely monumental, and basically tells you don't start thinking that the low is in yet. So now we can move on to the last part, which is the price action, and using our SMPDT to then go into the execution stage or bullish. Okay, guys, so for the last part here, our analysis, again, we got to keep in mind everything that we just said now that we're moving towards the execution stage. And this is when you want to start using your fibs, your support and resistance levels, and all that good stuff along with your SMPDT, which again, you could also use that one for your anticipatory stage. So here, of course, looking at our SMPDT, we're 2 days away from the end of the quarter. Let's hide this real quick. So two days away from the end of the quarter and the end of the month. So, of course, like I've been saying, I want this quarter to close bearish. I want this monthly candle to close bearish. So that means what? We're not buying the bottom side wick. So that's when we're not buying any bullishness right now, because you just end up buying the bottom wick of a bearish candle. I'd much rather wait for the new candle that has the potential to close above its open. So with that in mind, in these next 2 days, what don't I want to see? If I want to stay bearish, I don't want to see this monthly candle close above its open, right? So if we go back to our daily candle, and it's no surprise, again, the smart money sold this high this entire time. This is up to the amount of time we have the data, right? Up from the 15th to the 22nd. And it's not surprising that, one, they were involved in one of the largest sort of like trends. You can see here is a big consolidation. And then when they added shorts and they lessened longs was the nicest 28% drop, right? So it's not surprising, one, that they were involved in that. And two, it's not surprising that they were the ones that dictated whether we went back below the monthly open or not. Okay, so when they sold here, that put us back below this red line here, the maroon line. That's the monthly open, which is 37.2K, 37.3K. That's one level we don't want to see price go back above. Again, you can also draw out your fibs, so from here to here. And within our fib levels here, so between the 61 and the 78, we have this orange zone right here. And that's one of my levels that I don't want to see get broken. So between 36.3 to 37.1, I think it is. Let's see. Yeah, 37.1 to 36.3. That's my zone at the moment. I would like to see that get respected. And one last time, that does also coincide with the COT positioning on the range that the smart money added the shorts on. So there you have it, guys. I'm bearish. I'm still bearish. The smart money added more shorts. The decreased longs, the hash rate hasn't bottomed out, and the NUPL is really the one thing that we're using right now from the information we're giving you guys. Of course, there's other things we use in our mastery course, but from the current information that we're talking about, the NUPL is really the only one that has hit the point that we wanted, and it's something we've been looking for since all the way back up here. We were looking for this quarterly open to get respected as a sell. That sell right here, swing high, swing low, sell, and then we wanted to see it hit somewhere around here to then turn that NUPL green. So let me know what you guys think. Do you agree with the way that we're doing things around here? Again, it is my belief, and it always will be, and I'll make sure to mention this at least once every single video, that you don't want to trade against the smart money. If you do happen to have a way to identify when big money's coming in or out of the market, well, you should, even if they're going to be wrong, just because they make a bet doesn't mean, they're right all the time. But you'd rather be wrong with them than be wrong without them. So with that being said, guys, take care. Check back in tomorrow for the Ethereum video. If you like this video, give us a thumbs up. Make sure to subscribe and turn the little bell icon for notifications on new videos. So talk to you guys soon, and have a good day.